Hey there, investors. Fasten your seatbelts. Japan's financial markets are on a wild ride. After a historic 12.4% drop in the Nikkei 225 on Monday, the biggest single-day fall since Black Monday in 1987, today has brought an equally historic rebound. The Nikkei 225 surged over 10.23%, recouping almost all the losses from yesterday. What's happening? Well, Monday's sell-off was triggered by a sudden spike in the yen's value. The Bank of Japan's recent rate hike caused a shockwave leading to extreme volatility, but today there's a sigh of relief. The fundamentals of Japanese companies remain strong. This extreme volatility isn't for the faint-hearted, but it's also a reminder, don't panic sell. Let's look at the numbers. The Hang Seng in Hong Kong is down slightly but nowhere near Monday's losses. The FTSE in London is relatively calm. Meanwhile, the yen has stabilized, trading around 145, 146 yen to the US dollar, still weak historically but better compared to yesterday's rate. On Wall Street, the S&P 500 closed down 3.05% and the Nasdaq down 3.5%. Today's rebound in Japan has sparked some hope, but the question remains, is this recovery sustainable? Could we see another sell-off tomorrow? Markets tend to ebb and flow, and this roller coaster may not be over. Some traders have been taking advantage of Japan's low interest rates to borrow yen and invest in riskier assets. This so-called carry trade became risky as the yen strengthened. Algorithmic trading programs and opportunistic buying have also played a role in the volatility. What's next for US markets? European stocks have steadied, and US futures point to a modest rebound. While we may not see a 10% rise in the US, there's optimism for a calmer day. Recent US economic data like the stronger-than-expected services PMI has delayed some recession fears. So keep an eye on Japan. It's clear that what happens there will ripple through to Europe and the US. Stay informed, stay cautious, and let's see where the market takes us next. That's all for today. Thanks for tuning in.